In the meantime, it's time now for top picks from our market call guest, Bruce Murray. Meta Platforms is the first one, Bruce. It's the company that we all still want to call Facebook. Meta, M-E-T-A, is the ticker symbol on the NASDAQ.
Sure. Well, thanks, Paul. Just an introduction. I've made 3 fairly aggressive picks for the next year, believing that the market is a great value right now and is going to, we could be substantially higher a year from now. So Meta, formerly Facebook, this stock's been cut in half in the last 9 months. People love to hate Facebook for 1,000 reasons that I won't get into, but it's now selling at 12 times 23's earnings. And it's a global leader, in these apps, Facebook, Messenger, Instagram, WhatsApp. They're all well known to most of us. And we believe they'll continue to propel Meta's revenue growth forward by at least 15%. And so you've got a company selling at 12 times earnings, growing 15%, that has no debt and has a massive profit margin. They've got $60 billion of cash on the balance sheet, so they could go out and start buying back stock. The metaverse, which they've changed the name to, is an incredible opportunity, and it could still be as much as a decade away, though. But if they manage to be the leader in that, it's going to be a huge home run. And we believe the stock is going to sharply recover when confidence returns in the next 12 months. The average target price, even by the street analysts, is $290, which is 70% higher than today's price. And that's sort of a 12 to 18-month target price.
Okay, number 2 is also a tech behemoth that changed its name some time ago now from the name that we know it best from, Google, to the name that it is its official corporate name, Alphabet. You like and there's two versions of the stock as well, two issues. You like GWOGL on the NASDAQ.
Yes, it has no vote, which is, we're not big enough to make any difference in the voting, so we might as well save a little bit of money purchasing the stock. So, this is an incredible stock. It's off over 22%, which reflects the revenue growth slowing from 40% per annum in the 22 in the last couple of years into the 15% range in the 22 to 24 period. But again, Google's got a margin of over 55%. $100 billion in free cash flow every year and beyond. It's a dominant software company. Like the search business are going to continue to be dominated by them. Android is, they own the Android business, which is half the telephone market. And YouTube, there's not a lot of challenges to these businesses. It's number 3 in cloud service behind Amazon and Microsoft, and we expect Google to, continue to do very well. The average target price is $3,050, which was its high. We think it'll get back there in the next 18 months.
Okay, and finally, we go to the world of women's fashion and a Canadian company that has become very, very successful in selling those fashion items around Canada and the U.S. Aritzia, ticker symbol ATZ on the TSX.
Yeah, so Aritzia is, for most of your viewers will know, is one of Canada's great growth stocks. And, stock trades as high as $60 in January when they just reported last year's earnings. It's down 40%. Company's a substantial opportunity. They've got 70 stores in Canada and only, 33 or something in the U.S. So revenue should continue to grow in the mid-teens just by increasing store count and online sales. I think the young global internet consumer is pretty aware of them, and median price target again is $62 for the next year, and so selling at 18 times February 2024 earnings, and 18 times for a retailer that has very solid growth opportunities is a low PE.